Imagine waking up one morning and discovering that trillions of dollars just evaporated. Businesses collapse, people lose their savings, the ripple spreads across the world. Welcome to the heart-pounding drama of financial crises. On-screen text: 5 financial catastrophes, and what could have stopped them. Intro 022-040. Host on camera: Hi, I'm your name. Today, we're diving into 5 of the most devastating financial crises in history, and more importantly, what solutions could have helped avert them. Trust me, these lessons are more relevant than ever. Segment structure: 40 to 120 seconds each. 1. The credit crisis of 1772 scene. Dramatic reenactment of London bankers fleeing. Narration: In 1772, when banker Alexander Fortis fled to France, it triggered a credit collapse that rippled across Europe and even helped spark the American Revolution. Banks stopped lending. Panic ensued. Solution highlight: Introduce central bank-style liquidity support to manage sudden withdrawals. It wasn't available then but later. Governments learned that acting as a lender of last resort can stabilize an outbreak of panic. Why it matters shows the foundational role of liquidity and trust in financial systems. Based on Britannica's summary of the 1772 crisis. Encyclopedia Britannica 2. The Great Depression 1929-39. Scene: Black and white visuals of breadlines and stock market crash. Narration: Black Tuesday, then a domino of bank failures. The economy spiraled as people hoarded cash and unemployment soared. Solution highlight: Introduce strong fiscal stimulus and financial reforms like deposit, insurance, and securities. Regulation of blueprint later adopted by the New Deal and the 1933 Securities Act. Britannica overview of Great Depression. Encyclopedia Britannica. 3. The oil crisis and stagflation 1973. Scene: Oil rigs and gas lines, with inflation numbers rising. Narration: OPEC's embargo sent oil prices skyrocketing, plunging economies into stagflation. Inflation plus stagnation. Solution highlight: Policy mix of supply-side reforms, for example. Energy diversification, tight but balanced monetary policy, and targeted subsidies to ease immediate pain points. Tackling both inflation and stagnation requires nuanced tools. Britannica's mention of stagflation from the oil shock. Encyclopedia Britannica 4. Asian Financial Crisis 1997. Scene footage of melting currency symbols and stock tickers. Narration: In 1997, currencies collapsed across Asia. The IMF stepped in, but not without controversy. Solution highlight: The International Monetary Fund issued bailout packages tied to reforms raising interest rates, closing insolvent banks, and improving transparency. A tough prescription with long-term benefits. IMF's role in structural reforms during the Asian crisis. Wikipedia 5. The 2007-8 subprime mortgage crisis scene. Modern banks, foreclosures, stock market chaos. Narration: Subprime mortgages collapsed, and with them, the global financial system. Lehman Brothers fell, and panic deepened. Solution highlight: Governments deployed emergency measures like TARP and the American Recovery and Reinvestment Act. Shored up bank capital and passed sweeping reforms under Dodd-Frank to curb risky behavior and protect consumers. Details from the subprime crisis and government response. Wikipedia +1 Council on Foreign Relations closing wrap-up final 20 to 30 seconds. Host on camera: From runaway speculations to energy shocks and housing bubbles. Financial crises have different causes, but they often demand the same remedies: transparency, regulation, liquidity, and global cooperation. Call to action. Want to see how we can guard against the next meltdown? Smash that like button, subscribe, and let's build a smarter, more resilient financial future together.